Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. Keith did a great job. Thank you, Keith. I'm not sure if he's here. Oh, it's not Steph. Keith. No. Okay, but I appreciate it. Thank you. Hopefully he can join us more often. It's always good to have different perspectives, especially professional market makers, traders. So I'm glad you guys like them. Lalit, good morning. Bill, John, yes. Okay. Then let's see. Let me make sure that I got all my screens correctly. Okay, let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Welcome on Discord. Cherry Blossom, welcome. Welcome on YouTube. Appreciate you guys participating. Let's see, is Alon here? Yep, Alon is here. So welcome on YouTube. Please, we're trying to build our audience. So if you haven't clicked on subscribe, please search us on YouTube. Search for the word Tradespoon. Hit on subscribe. If you like these broadcasts, please click on like. Very important. I think one of the main differences between our services, Tradespoon, Yellow Tunnel, and maybe some of the other services out there is that we do both. We're heavily invested in technology, AI, building models and generating signals using latest advances in AI, neural networks, new libraries that are available, RScript, MATLAB. And we also not only provide these signals, which other companies also do, but we trade them, right? We trade them in the live trading room, and that's what we're here for. So I've been doing that for over 20 years and been CTO of several fintech companies here in Chicago, and started Tradespoon over 10 years ago. Disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to read the disclosures and visit the link on your screen, optionstrading.com, to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor. Before I make any trading decisions. All right, trading psychology is important. Process versus outcome. Obviously, we all want to make full-time or part-time income from trading, but the first you need to put process ahead of the results. Right? What does process mean? Repetition, where you can document your trading strategy, give it to somebody that can execute it. Right? To me, process means you have rules in writing, and then before you place a trade, you have a journal where you document every single trade that you make, and you put down why you got into the trade, why you got out of the trade, and have a checklist of your rules, right, to make sure you don't break them. And as a reminder, right? So one rule is cash. I think that's very important. 30% of your portfolio in cash. Market is overbought. We have a lot of rotation from growth to value stocks, small cap stocks. So it's important to have cash. That's rule number one. Rule number two, portfolio drawdown, number of positions, time position size. I propose that if you're new to trading, you have only 4 positions at a time and no more than 2.5%. Sometimes you do want to get 10, 20 positions because you turn on the news and you have all these professional money managers or traders speak, and one like, Bitcoin, the other one wants, the euro, the other one wants Rivian and NVIDIA and AMD. But realize that a lot of these stocks are highly correlated to the move in the underlying indexes. and B, they're highly correlated to each other. So you might get overly exposed. So for that reason, try to diversify, no more than 4 positions and 2.5% at risk. Portfolio probability of success versus return on capital. Very important to structure your trades. Either you want to be long volatility or you want to be short volatility. If you're trading stocks, you want to look at the price pattern, chart patterns, support resistance level, and look at the probability of success of the trade, right? All the chart patterns, they have studies out there. You can read, technical analysis books, but, every setup, head and shoulders, descends and ascending triangles, they have certain probability of success, right? So you want to structure your trade either with high probability of success and smaller return on capital, or high return on capital but smaller probability of success. Learn how to manage position entry and exit, right? That's important to have exit strategy, and look at the risk versus gains versus losses, right? The asymmetrical relationship between gains and losses, right? On a $10,000 account, 2.5% is $250. We all have different relationship with $250. When you confront it with $250 gain, when you confront it with $250 loss, you want to be consistent. So I would document that in journal. Make sure that you always look, if it's 1-to-1, 2-to-1 between risk versus return, you're trying to be consistent. And then I would grade myself, right? A and B if I follow my trading plan and then deviate, or C and D if I deviate from the trade strategy in a journal. Okay, so for spiders today, let's see. We continue to make new all-time highs. Spiders is up today, neutral trend. We do see overbought based on earnings and macroeconomic conditions. We could get to 575 in terms of positioning, right? Let's look at the positioning. That was the 575 level. And in terms of support, let it load. Sorry about that. Okay. So now I'm looking at the dealer exposure positioning. So looking into 0-day still expiration, plus today is expiration week, so you have to be also mindful of that. You can have rise in volatility due to today's VIX expiration, right? We have VIX expiration today that causes volatility, and then we could have support this week, 560 short-term support, July 19th, which is this Friday. After this Friday, main support is at 540. 540, there's some support at 545, a little bit at 547, but I would say 540 to 550 is where your support and resistance levels are. And that's the dealer positioning. And then our neural network model shows 573 on the upside. On the downside, it sees 560, maybe 555, right, as low. So if you look at the chart, let's look. Earnings season started. I think ASML and LRCX were in the news. Kind of a cautionary outlook on the semiconductors. From seasonality point of view, again, we're approaching end of July, right? We're in the middle of July, so now the last 2 weeks is usually you have some kind of a consolidation, and then August, you could have further pullback, right? Further pullback. And we talked about seasonality, in fact. Usually, you don't trade just on seasonality, but you can look at rotation into small caps. So you could have consolidation in the next 2 weeks, and then maybe bigger pullback in August. We're still in this consolidation mode, and we are rotating, right? NVIDIA is retesting June lows, down 4%. And I think LRCX announced earnings, if I'm not mistaken. Oh no, 14 days. Sorry, who announced earnings today? ASML, right? Sorry, ASML. So ASML kicked off earnings, and it's down 8%, right? Sharp pullback in ASML, and this is all AI story, right? That maybe it's a little bit ahead of itself. And Taiwan Semiconductors, let's see, when did they announce in earnings? Down 5%. Okay, Thursday. But it's across the board, right? AMAT actually closed AMAT yesterday. It was a good decision. Also down 6%. So semiconductors are pulling back across all sectors. I mean, across all semiconductors. And also you have rotation, right? And Apple is down 2% pre-market. You have Microsoft down 1.5% pre-market. Google, Amazon, maybe 0.5% down pre-market. And IWM, right? That's the story of the day, is just kind of a vertical move up, right? On very large volume. They've been comparing this as the largest move, since 80s or something like that. But, small caps usually don't move as much, and basically they're on its way to catch-up trade, right? So now I think next stop is all-time high, the 2021 high, which is around 245. Maybe another 5% up, but you do have a very sharp move into the small caps and into the value stocks, right? VTV, that usually I watch VTV, and also strong move to the upside breaking out. So you have a bullish rotation into value stocks, and at least for now, mega caps are consolidating. We do have earnings from Netflix that could spark additional move. So that 17,114 level, right? That's June low, right? So if we break 114, then the sell-off could accelerate. But we'll see. A lot of it will depend on earnings, and so far ASML did not save the day, and you have a sharp pullback in ASML, down 10%. So support and resistance 2.5%. I propose to, let's look at 1 hour. So we're down 1% on spiders. 556, right? 556. You can see support at 556. Let's look at 0 days till expiration, at least short term if you're doing day trading. So today, tomorrow, and Friday, the expiration, you have large position at 560. So 560, 555 is well positioned into Friday. 560, 555. We're already below 560, so I would watch the 560 level carefully, right? This is the last 2 weeks lows. We're trading below that level. If we don't hold the 560, then 556, right? I think at least, the 0 days till expiration traders will step in at 555. Let's see how the small caps are also down today. Energy is up. Silver, LA Lilly is down 3%, and VO is down 3%. NVIDIA down 4%, Amazon down 1.5%, Apple 1.5%, Microsoft 1.5%, General Electric 1%, AMAT is down 7%. UNH is up, Johnson & Johnson after earnings is up, LA Lilly after earnings is up, down 4%. How's my Synchrony Financial that we traded? Synchrony Financial is actually holding on pretty well. Okay. So the model identified that uptrend, and even despite the earnings, it's still, at least for now, holding on after the earnings. Okay. Any questions on target gain and stop losses? All right, so spiders. At this point, I would watch 560. If we stay below 560, the next level is 555. All right, so this is support number 1 right now, support number 2. And then this breakout, the June high breakout, is your 550 is your support number 3, short term. So that's what I would watch. Meanwhile, spiders are down 1%, banks are flat. In terms of models, let's look at the models. You can find it in aggressive power trader, or you can find it in the active trader. FedEx, transportation, energy, and banks, right? These are the companies that the model has identified using our neural networks. Aggressive power trader, I think they're a little bit more. Home Depot is also, right? So, I mean, I like all 3 companies. So let's just add FTX, JP Morgan, and ExxonMobil. Let's see, ExxonMobil. So it looks like ExxonMobil is trying to break out, right, from this, broke the downtrend, continues to grind higher, right, energy. And JP Morgan also broke out and continues to trade higher. So both trades are good candidates. Usually I wait 15 minutes and see if there's any where you can find support and resistance, right? JP Morgan is flat. FedEx is pulled back but recovered. And a lot of it, has to do with interest rates, right? The idea, the reason for this rotation is that 10-year yield continues to make new lows, right? And we broke through major long-term overhead resistance. Marginally, I would say marginally, right? This April lows were a little bit below that. I think we were at as low as 413, 415, 416, kind of where we are now. So marginal lows. I think if we extend this week or next week, we extend to the downside. What are some of the news we have? We have July 17 page book today, right? So this is important, kind of forward-looking guidance in terms of economy. That could spark move in volatility. Housing start, building permits. U.S. leading indicators. Tomorrow, initial jobless claims. And then next week we have PC data, July 26, PC data. And then we have Fed, I think last Wednesday of the month, Fed's decision. So that could spark volatility, and obviously for now, lower interest rates is good for the market. So that's positive. And dollar, weaker dollar, sharp pullback in dollar. Yen, Japanese yen continues to grind higher, which is also positive for the market. And I think FXE is also grinding higher. Euro is also grinding higher. That's bullish for the market, right? Weaker dollar is bullish for the market. So value staying positive, QQQ down almost 2%, semis 4%, spiders 1%. Small caps are flat. Regional banks are turning positive, silver down 1%. So let's go through the trade. So steepening of the yield curve, right? We had flattening of the yield curve. Now looks like we started steepening of the yield curve, where 2-year yield briefly dropped below 30-year yield for a brief moment, but nonetheless, everybody's excited about that, and main beneficiary are banks, right? Banks. So I think small position in JP Morgan makes sense. JP Morgan continues to grind higher. So breakout level, for short term, I would say 210, maybe, right? 2% would be a stop loss, maybe some more conservative 206. That would be $8, so maybe 4%. If you're a medium-term trader, I would do 4%. If you're a short-term trader, maybe 2% as your stop loss. At that level, you don't. I'm going to say I'm always conservative, so I would say $6. If JP Morgan drops $6, I don't want to be down more than $100. So 6, I can buy what? 10, 15 shares, right? 15 shares. So JP Morgan. And look maybe for 1% profit, which would be 250, 217, 90. And maybe look for 2% profit on the rest of the shares. So maybe 218, 20. Was the idea that this is a confirmed breakout and the stock is going to continue going higher. So JP Morgan entered to 14.49. You can do call spreads, right? You can buy a call spread. Going into September, you can buy at the money options, right? A lot of people ask, what if I want to trade options? And we do suggest in this option portfolio or in active trader, you can buy July 19 at the money or in the money call, right? Usually I look delta 70, delta 80, because you want to know for $1 move in JP Morgan, right? I'm going to get out when JP Morgan moves 1%, $2.50. So delta 70 would be 2.5 multiplied by 0.70, right? So I don't know, $1.70 it will move. So that would be the approach if you want to trade options versus stocks, right? Stocks advantage, I don't have to be right on time. JP Morgan can go up, can go down, but I would be still bullish on JP Morgan. Any questions? Johnson & Johnson, after earnings, continues to grind higher. Let me see. Let's look at that really. Johnson. Johnson's 155. Any questions so far? Fred Faust, Mark, good morning. Question open and breakout about 10 days ago. QQQ opening at the breakout about 10 days. Yeah, so QQQ is, we see JP Morgan is up, ExxonMobil is up, Johnson & Johnson, UNH continues to grind higher, but AMET is down 6%, NVIDIA is down sharply, Apple, Microsoft, Google. So it's a significant rotation. We'll see how long it lasts. But it's been like this for a few weeks, right? Ever since the CPI data, that's the trade, right? How long does it last? We'll see. But usually the small caps were leading us to the downside. Now the small caps are leading us to the upside, and are actually pretty stable on the pullbacks. So that would be the trade. Let's look at Johnson & Johnson in terms of positioning. And open interest. So a lot of overhead resistance is at 160 level, 160. So I did butterfly in my personal account yesterday. Let's see. So looks like it's started to go in my direction. Johnson & Johnson. So potentially it could be as a magnet toward 160. We still have a few days left. So let's see, 155 call. Maybe 1%, another 1 or 2%. Let's see if I can close it at $3. But you can see very high opening position, right, at 160. So it could, but delta gamma exposure is positive. So dealers are long gamma. That means, as it approaches 160, they are forced to sell. Are they going to sell at 155? Are they going to sell at 559? We'll see, right? But for now, Johnson & Johnson, there's a lot of overhead resistance at this level. But if it does able to reach that escape velocity above 155, I think it could get close to 160. LA Lilly, not very liquid, I didn't do it, down 2%. And we talk how's my Synchrony Financial doing. That has been a long signal for quite some time, and Synchrony Financial is flat after the earnings. Okay. I like ExxonMobil too. Maybe a small position in ExxonMobil also makes sense, right? It's also reaching this escape velocity. 116. Okay, so I have a stop loss. I would say if it closes the gap, maybe you want to get out, so maybe 1% or 2%. So if it's down $2, right? If ExxonMobil is down $2, I don't want to be down more than $100, right? So let's do ExxonMobil. Follow the crowd and rotates. Okay, so if it's down, let's say $2, I want to be so maybe 50 shares. Okay, so I got into ExxonMobil. I would say same thing. I would sell half of the shares and look for 1% profit. So that would be $1.18, 118.40, 118.40. And then second half of the shares, I would sell at looking for 2% profit would be right below this line. I think that's the next overhead resistance, maybe 119.08. 119.08. So that would be my thought process on the. Now I have exposure to energy and banks, right, which I didn't have before. So now let me see how much. Since I trimmed I exit out of. What did I exit out? AMAT yesterday. So I did close AMAT. So now I need to see if I can. How much equity do I have? And I'm going to initiate IW. IWM continues to grind higher. I'm going to buy the stock, ETF. So I'm already long options spread. Obviously, breakout, if you want to be conservative, I would say 212. But with this volume, I doubt we're going to get to 212. That'll be, I think, is a good opportunity. But that implies 5% move to the downside. I mean, 212 to 216, I would say. The gap is usually, that would be the first support, 218. That's 3%. So at 218, let's do 216. I'm going to be conservative. So $6. So if it drops $6, 3%, I want to be down $100. No more than $100 on $10,000 portfolio. So if I have $10,000 portfolio, I don't want to be down more than 1%. 6. So how many shares can I buy into 100? 15. Right, so 15. IWM, I think I want to be a little bit more conservative. Aggressive, and maybe look for 2% profit. So let's see. Let's see what it looks like. Well, I think next stop is 240. Next stop is 240 eventually. So maybe look for 2% profit. That would be 229. 229. And maybe the other half of the shares are at another 2%, so maybe 229, so maybe 230, 234, 234 on IWM. So that would be here, IWM. Or you can find the same trade in Dynamic Power Trader. Where I'm adding IWM and trying to get up, exit General Electric. Mario, what does the trade indicate about gold? So gold has been in strong uptrend, medium term, long term. Short term, it's overbought. It's been overbought. In terms of positioning, let's look at the positioning for gold into August. And into September. So very large demand in September, actually for September, is 240. So between now and September, somebody's waging high open interest, right? 20,000, this is very high, that it can get to 40 or even to 50 in terms of gold, right? So dealers here are short gamma, right? Gamma exposure, they're short gamma. That means they are forced to, as it approaches this level, they're forced to buy the stock. They're forced to buy the stock. So gold, silver, I think has similar profile. Let's just confirm that. So when dealers are negative gamma, short gamma, that could cause this, escape velocity, but you need to reach it, right? For now, I don't know if we're not reaching. Same thing with silver, right? Very large position at 30 for silver. Right, so silver could reach 30, but it needs to break through this 29.50. It's been consolidating, but dollar is down, yield is down, next move down. In theory, silver and gold should rally. And gold is already actually turning positive. Gold is turning positive, GDX is flat, and I think silver is gonna rally as well. How much silver do I have? Maybe it makes sense to add to silver. A small position in silver, let's just add. Okay, so I just added to silver position as well. If dollar continues to trend lower and interest continue to trade lower, right? If inflation is dropping, all of that is bullish for the market, for the silver and gold. Mario, thank you. Bob. I mean, question: what is the reason for this, sell-off in semiconductors? I think the biggest reason is rotation. Right, the dollar is on the top to bottom, approach, right? Macroeconomics. When 10-year yield continues to drop lower, when dollars continues to be weak, right? That is beneficial for value stocks, right? Your energy, your airlines, not airlines, well, airlines too, I think, right? Jets, I think, were also rebounding despite earnings from Delta Airline, right? But jets. And the market also grinding higher. So I think, yes, I think most of it is rotation, right? That's one reason. The other reason, the stocks are extremely overbought, right? The semis or mega cap, the AI narrative is extremely overbought, right? And the expectations are extremely high. And now we have earnings. I don't think ASML said anything negative. Maybe forward guidance was a little bit lower, right? I think they said next quarter or next year is going to be the same as this year, and that's enough. Earnings. 5-hour revenue fell, toppest, but topped that. So revenue fell, right? I mean, I think they beat on the bottom and top line, but just anything negative where revenue fell, but topped analysts, right? That is negative, right? Plus, you have risk of China, right? If Trump, right, politics, right? You turn on Bloomberg, now it's all about elections, right? So that is the main theme. And one of the Trump's policies, right, is get even more hawkish on China, right? Put more pressure on China. How do you put pressure on China? Well, semiconductors, right? So that's enough to cause, the market to pull back. So now you have to be careful, right? You have to kind of keep an eye on semiconductors and NVIDIA. I mean, we had these pullbacks. This is probably a little bit sharper than we had in April. Similar to April, right? This is similar to April. I mean, if we rebound next week after other semiconductor earnings, then maybe this is just a small pullback. But if it continues into the next week, as Taiwan Semiconductors, you have AMD, right? Who's next? AMD, I think. When are they announcing? Down 6% in 13 days. So in the next week, if that trend continues, then I think the pullback is going to be more meaningful. I think from seasonality point of view, there is a risk that as we are approaching end of July, you're going to have a bigger pullback in semiconductors, right? SMH, I think, what did it do last year? Right, it basically reached the top end of July, right? It reached the top of end of July, and then it just started to drop lower. So semiconductors, reached the top at Middle of July, we'll see. Maybe we'll have another bounce back, but I think we could have similar setup as last year. What was it the year before? Same thing, right? End of July and then sell off. So last 2 years, August, September hasn't been a great time for semiconductors. Doesn't mean that this year is going to be the same thing. I mean, probably too early to tell, right? 1 week doesn't reverse the trend. But if we're going to have a continuation, right, another big red candlestick into the next week, well, then probably, we've set the top for, a few months. Fred, Keith had positive comment on COP. Yeah, I mean, I don't know what I like better. I mean, I like model, right? Model doesn't have emotions. It's kind of, I like if the model gives me a signal and I agree with the signal from macroeconomics standpoint of view, right, top to bottom, then that's the symbol. I mean, it's doing a catch-up trade. It's below 50-day moving average. It's below 200-day moving average. So if you're a contrarian trader, maybe that's better. If you're a momentum trader, then ExxonMobil is better, right? The chart of ExxonMobil is much stronger than the chart of ConocoPhillips. COP is ConocoPhillips. Yeah, sorry, I'm drawing blank. ConocoPhillips, right? So just depends, but they're highly correlated. It's not like ExxonMobil is going to rally, but COP is not. Earnings is something to keep in mind, right? That could differentiate. ConocoPhillips August 1st. You have 2 weeks for the trade to come to your direction. ExxonMobil has a little bit less, right? Maybe a week and a half till earnings. Desi just arrived. Desi, welcome. Desi cares about JP Morgan. I'm long JP Morgan. I don't know if you've been trading it, but it did break through this overhead resistance, I think, with the yield curve potentially steepening as inflation is coming down in Europe and in the United States and across the globe. And if the soft landing narrative stays intact, then banks are one of the main beneficiary. And TLT, I know you trade TLT. It didn't break out June highs. It's consolidating, but it's still a pattern of higher highs, higher lows. Right? So right now we're, it's ascending triangle. It needs maybe another CPI data print, or more importantly, Powell's speech, right? The anticipation that Powell is going to change his rhetoric, right? Powell is going to be more dovish. End of July, right? End of July, Powell speaks, and the anticipation is that he's going to say, you know what, September is on the table, and we're probably going to raise interest rate. Maybe not in those specific language, but he will give an indication to the market that he will lower interest rate in September. That will cause TLT to break out. If he sounds more hawkish instead of dovish, right? If he says, sorry, I don't know what I say. So if you dovish, and he says the probability of interest rate increase in September has improved, you're going to have TLT move this way. If he says the other way, that we're data dependent and it's too early to tell and blah blah blah, and September probably not going to happen, then you're going to have a sharp reversal. So that's coming end of July. If it clears current level. Dear, I mean, industrial, let's talk about ETF first. VTV is up, industrials, sharp rally on above average volume, very similar to VTV. This is a good price pattern, similar to FedEx, similar to IWM, similar to JP Morgan. Just keep in mind, all of the stocks that are in this basket will move in the same direction. So you don't want to be overly exposed, right? Look at your equity level. Make sure you have at least maybe on average 30% of portfolio in cash. But all of these stocks patterns look very similar, right? Let's look at Deere. It's underperforming. So it's a catch-up trade. Earnings are in 30 days. If you're a contrarian trader like Fred and Bob, and you like to buy these bottoms when they build because there's a lot more room to the upside, yes, I agree. It's up below 50-day moving average, above 200-day moving average. Let it clear the support line. And then, especially going into the earnings, we could have rally, especially if industrials continue to rally. But you want this level to be broken above average volume. You know, I personally think that, let's see, what is all this? Cummings? Sorry, CMI. I mean, CMI looks better, right? It's trying to break out. It hasn't broke out, but CMI looks better to me. Let's see. I think Dove was in one of the signals. DOV, right? Dover Corporation. That, you know, so if you're a momentum trader, it cleared overhead resistance. If you want industrials, but you don't want XLI, okay, then DOV, right? Or something like that. But obviously, DOV is better than Deere and let's see, how's our body Caterpillar doing? Even Caterpillar looks Deere, but it's also kind of, you know, trying to, you know, close the gap. Plus, earnings going to start. General Electric, Deere, Caterpillar. So, you know, I think safer trade would be XLI. You know, if you're conservative like me, don't like to take too much risk, I like this price pattern, XLI. If you're, you know, if you're a little bit more aggressive and you like contrarian trades, then sure. All right, Desi, I talked about 10-year yield and TLT. Let me know if this is, if I answer any of your questions. Ford Motor got filled. I love these text messages. I don't even have to look at them. And all right, so Ford, one of the positions was Ford, right? Consumer discretionary. And I'm out on half of the shares on Ford. Continues to grind higher, up another 1.5%. Despite, you know, pullback in semiconductors and QQQ, earnings is in 7 days. So I have a position left, half. Ford could be volatile, right? Ford could move 10%. So this, you know, our friends in the bar chart, with this estimated move analysis is a great tool, right? Even if you're not an option trader, right? Ford going into the earnings in 7 days, you know, I don't have to guess. I can just say, well, expect 10% move between now and next Friday in Ford, right? With the rise in volatility at 52%. So Ford could drop 10%. That would be $1.40. That would be 14, right? Oh, sorry, $1.40 would be, 13. So Ford could be a $13 stock, right? Or it could be more. So I propose if it drops to 13 and you're still bullish on Ford, you don't want to be down more than $100 on $10,000 portfolio. You know, if you have 10 shares, right, then I think you're okay. 100 shares, you know, then okay. Maybe 80 shares, you're okay. If you're 25 shares, you know, you might want to reconsider on $10,000 account because you will have, you know, sharp reversal. So for now, I am, you know, I trimmed half of my position, was able to capture, I think, 1%. And this was a short signal not that long ago, 7:15. Okay, this is Monday. Forgot about it. Monday. Okay, so I was able to capture 1%. And before the earnings, probably either close or, you know, maybe trim further, probably try to close Ford. So that's the Ford trade. Any questions on Ford? All right. Discord, guys. Okay. Thank you, Cherry Blossom. Bill. All right. Let's review other positions, make sure that we cover everything. So Bank of America continues to grind higher, right? It was good that I closed the short Condor, right? Iron Condor. I didn't, but obviously, it's not so much as earnings is this rotation move that pushed Bank of America. And I mean, it's still at 44. So that's also a good observation that that's where the high open interest was. So at least as of right now, it hasn't reached that escape velocity, right? But you have larger position in, July 19th, 45. So it could get pulled to 45, 46 level, right? Because dealers are long gamma and high open interest is at 45, 46 level. So I think, it was a good decision to just cut your losses and move on. So, lost 10 cents on this trade. Talked about Ford. I just trimmed Ford position. FXI was Trump assassination attempt, and probability of red wave has increased tremendously. For now, obviously we had a strong momentum in April, and it gave up half of the gains. I would say if it drops below 26, maybe get out of the trade, right? Because you don't want to fight the trends, and until the elections, you probably won't even know who's gonna win. So price patterns. So I would probably consider exiting position if it drops below 26. General Electric earnings, going into the earnings, I think next week, right? So I still have 6 days left. It is pulling back today, but it's still fighting for that 50-day moving average, right? Strong consolidation. A lot of it is going to depend on earnings, right? We've been consolidating since April. Before the earnings, I would probably get out of the trade. Google is also down today, also announcing earnings. That's the only technology position that I have. It has pulled back significantly to the 50-day moving average. It's broke through July lows. It's approaching 50-day moving average. Earnings is in next week, 6 days. So next Thursday, Google earnings, it could move, right? Google can also move probably 10% is too stand, but I would say it's probably 5%. Estimated move is 5%. Oh no, 10%. So Google could be up, down 10%, right? A lot of, next week, a lot of volatility. So at this point, I have 180, 185. I might, my strategy would be if I'm down 50% before the earnings, I would get out of the trade. If it recovers and gets back to 190 level, then I have time. But for now, it doesn't, looks like people are concerned with the earnings of the mega cap technology stocks and NVIDIA just, falling off the cliff. So I would watch NVIDIA June lows, right? This support level, I would probably, right? Then 50-day moving average. So we're basically retesting 50-day moving average, retesting June lows. Another day of these sell-offs, and it's going to turn negative. We talked about small caps. Talked about JP Morgan, LA Lilly, and not silver. So LA Lilly is also pulling back. It's a healthcare stock. It's not an AI stock. But definitely you see people are taking profits in their winners. Earnings is in 22 days. Personally, I would be a buyer on LA Lilly, but we'll have to wait and see. Any questions on the positions? Any other questions? Larissa Hava, Alona, Viva, Bob, Brenda, welcome. Claude, David, Desi, Don, Ernest, Faust, Fred, Han, John, Lalit, Louis, Mario, Mark, Martin, Maurice, Pam, Patrick, Raymond, Ted, Thomas, Tony, Vamsi, Darren, Bill. Thank you very much. Have a great day, and I will see you tomorrow morning. Thank you.